The following segment is sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. Is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Great to be with you, Ellis.
Now, there's a little bit of a correction in the market right now. While we've seen bullion prices come up in the last several weeks, stocks haven't come up or come back significantly. This pullback isn't more than profit-taking, and no one should be fooled by this correction. What do you think?
Well, I'm going to disagree with you slightly. Stocks you're following probably haven't moved, but a lot of the ones that we've recommended have done extremely well. In fact, some are making new highs. One's gone from minus 40% to like plus 40% in the same time frame we're talking about during these last few weeks. So, and of course, we are very, very, very picky, Ellis, as you know. It depends which ones you're looking to. Certainly, a lot of the undercapitalized microcap stocks haven't done anything, but some of the better quality stocks have done quite well during this time frame. So anyway, moving on, what do I think on the metals themselves? We were in a long-term consolidation between 34 and 35 on the silver market, and I put out an update to our membership explaining what I saw going forward, and it looked to me as if we were more moving to the downside than the upside. I told them that on my personal portfolio, if we got below 33.50 on a close-only basis, I would be out the market. That has taken place. I got in rather, at 28 basis a spot month, out at under 33.50 on basis a spot month. It isn't surprising to see this market, any market, move above a resistance level and then come back and test it one more time. And that's about where we're at. We've gone through this level about 3 times. We're back to it now. We're about to test it, it looks like. We're doing this, midday, so I don't know how the market's going to close today. Gold has a very similar pattern. It's about the 1780 level. It's fallen off from that. Looking at the commitment of traders reports on both the metals, both gold and silver, were very, very disheartening. Usually when you get that much short positions that are open, you usually can see a sell-off within the next week or 2 or 3. And that's, again, where we're at now. So I'm not shocked by this in any stretch. Basically warned my people this is what I expected, and lo and behold, here we are.
So a buying opportunity for traders again?
Not yet. I'd have to see more data, Ellis. I'd like to just wait and see. It's going to be really tough on this one because either I've got to pick a bottom and top picking is pretty difficult. I'm better picking tops and bottoms, although I've done well on both. Or you have to wait for the resistance level to get pushed through again and buy on a breakout, which is a safer way to go, but you're going to be paying a higher price. So as an example, on silver, if it broke through 35 and stayed there, then that would be a buying opportunity because all of the resistance has been overcome. On the other hand, if this market's going to, let's say, stop around 32.5 or 31 or something along those lines, it's pretty tough to pick, but you can certainly take a stab at it and get in at that level, and then hopefully it turns around based on whatever indicators you use, and away you go and you pick another bottom. So I'm undecided at this point. I'm very, very much like Richard Russell. I let the market tell me what to do. I try not to tell the market anything. I try to be objective as possible. Obviously, I'm very bullish to metals. I'm very bullish honest money. I'm very bullish truth in the financial system. But all that aside, I also have to look at the market from what the market's doing, manipulated or not, and make determinations based on that data. So I take that into account as well as the fundamentals, and that's how I make my calls.
Well, we're not going to see the buying opportunity for silver or gold that we saw in the summer anytime soon, are we?
I doubt it. I mean, I made the observation that buying silver under 30 would be good long-term and the equivalent in gold. We had about 6 months to do that. And are we going to get below 30 or not? I'd be arrogant saying that no, we won't, because I don't know. But I really, really doubt it. I think, again, the worst we're going to get in this pullback is probably $32.50, maybe the $31 level, even perhaps 30, but I really don't see it going below that level. Again, I could be wrong, but with all this going on with the money printing and really the desperation that's going on in the global financial system, and I don't want to use that word again, desperation, that the powers that be are in this mess, this quagmire. They can't get out of it. Because of that fact, I think that, again, that you're going to see, a very small correction relative to where we're going. In other words, you could see silver in, again, the $31 level or something along those lines, which is nothing compared to the upside.
And the market keeps absorbing this pumping of U.S. dollars into the system, doesn't it?
Well, it does. Basically liquefying the banking system more than anything else. You have all this liquidity, all of this money printing, as we refer to. It's really borrowing by the federal government for money they don't have and can't tax. But all that borrowing goes in, but it's basically going to the commercial banks and not being lent out very much. So the banks, have great balance sheets. They got all this cash, which replaces all the toxic debt that they have because they've given out loans that are not performing. So the bank's balance sheets look very strong, but the general economy isn't being helped at all. The physical economy continues to struggle. Yes, there are some areas that have done better, and perhaps there's a little bit more buying here and there in the consumer sector, but the reality is it hasn't done much at all, and this is QE3. I mean, how many more times do we have to QE before we're not going to get anywhere? And the interesting thing about QE3 is it's unlimited. There is no end date like there was with QE1 and 2. And Operation Twist gave an end date. There is no real set amount other than the amount of $40 billion per month, but that's like as a minimum target. There's no maximum. And then our European counterparts basically said, well, we're going to continue to print money until long as necessary, until, whatever. So basically, both the Eurozone and the U.S. zone has said, look, we're just going to continue to put out funny money in any way, shape, or form that we possibly can for as long as we can, as hard as we can, until something good happens. But nothing good happened other than for the banks. Again, I want to be clear there. But for the economy overall, it hasn't really helped very much. I mean, again, you could probably make some small arguments here and there and give some very small examples, but the general health of the economy really has not been helped in any noticeable way.
I'm just looking at an article that came out yesterday where a Fed chairman has said the Fed's effort, quote, not only helps strengthen the U.S. economic recovery, but by boosting U.S. spending and growth, it has the effect of helping support the global economy as well. Bernanke has practically come out and said we're funding the world right now with our funny money.
Yeah, well, they have. I mean, they've been kind of caught because since it's a private corporation, they don't really have to report to anybody. I mean, you might remember a few years ago, I'm off track slightly, but I forget if it was Congressman Paul or somebody asked something directly to Bernanke about the amount of money that was loaned, or who did it go to, I think was the question. And he said, well, I'm not going to tell you. He said, well, you have to. And he says, no, I don't. No. You just give a real quick no. And he's right. He doesn't. It's a private corporation. He doesn't have to answer to anybody. I mean, when he goes into Congress, it's basically a courtesy on the Fed's part. And Bernanke, and I'm not a big fan of his, but I will compliment him in this instance, has been a little more transparent than Greenspan. I mean, Greenspan was the master of obfuscation. I mean, he would obfuscate everything. I mean, he would talk in such gobbledygook that no one could understand what he was saying, but he sure made a great job doing it. Bernanke's a little bit more forthright, and at times Greenspan was as well, but nonetheless, if you listen and really separate the wheat from the chaff of what took place during even the Greenspan years, so basically say, look, we're broke. We can't keep these unfunded liabilities going forever. You guys are borrowing too much, which means the federal government, then that's burdened by the U.S. citizenry. It is not going to end well. I mean, basically, if you listen carefully and you got to kind of piece it together, they're basically saying this. I mean, even Bernanke has said at times, it can't go on forever, and nothing that can go on forever, as Chris Duane says, will. I mean, it won't go on forever. So even they know, but they don't know what to do about it other than print their way out of it. And what happens there, of course, is you get this somewhat slow burn for a while until it catches fire, and people will continue to get their unemployment insurance, and they'll get their Social Security, and they'll get their disability, and they'll get their food stamps, and they'll get all these government-backed programs. But they will not provide the meaning that they had in earlier years, and they'll get to a point where they're almost meaningless. And that, of course, causes people great pain and suffering, or can, and that's the direction we're heading, because the chances of the government saying, well, today's the last day, we're not going to make any more payments, pretty remote. But again, from a practical point of view, you're going to get to that point anyway, because you're going to get to a point where that Social Security Security check that used to cover your bills for 3 weeks will only going to cover it for 3 days, and then there'll be a point where it only covers it for 3 minutes. I'm joking, but giving the idea. And that's the problem. So they will continue this path, as far as I know, and I've seen and I've studied, where they pretend that everything is okay, and they pretend that the inflation rate is low, and they pretend that the check that you're sending you is as good as the one that was the month before, but in reality it's not.
And the reality where it really hurts us, we see the Dow over 13,000, we see a lot of positive pretend numbers, but the reality is the cost of durable goods is going through the roof, isn't it?
Yeah, a lot of your fixed cost items are higher. I mean, a good thing for any of our listeners to do is to ask a contractor, either that's still working or not, and say, could you build this house at this cost? In other words, with the real estate market being in the dire straits that they're in, ask a contractor, new construction, if they could build a whatever, pick your number, 1,500 square foot house for the same price that it's on the market for. And in most cases, you'll find the answer is no. In other words, to start from scratch, buy the land, get all the permits, put in the power and the water and everything else, and build the house will cost more than what you could buy it for in these distressed situations. The problem there continues, and that is that these property values may go even lower. So this puts a big bar on the construction industry. If you can buy used construction for lower than new construction, but I'm trying to compare apples to apples here, but the new construction being, or the old construction being maybe a year old. In other words, I'm trying to make it very equivalent, and that's the situation. And it's not all over the place, but in the areas that I travel a lot, as you know, Ellis. I mean, that's been the case, and every time I've done that experiment in a house, could you reconstruct that house, that same house, for the cost that you could buy it for? The answer is no. So this is a problem. I mean, this is something that digs really deep into the wherewithal of the physical economy, and it's based more than construction, but construction was sort of the last vestige of hope by this debt-based monetary system, as long as we kept building. And anyone that caught that motif, that mode, that way of doing business, it was China. They did it on a macro scale. I mean, you thought our construction industry was overbuilt. Well, certainly the Chinese is underbuilt relative to their population, but hugely overbuilt relative to their economic base. They have these cities to nowhere that are constructed, built, ready to be moved into, but no one can afford it. So there's big problems based in that money-based system, and it continues. It's not really getting better.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
And we're back. Well, speaking of the Chinese, and I'm glad you brought it up, and let's talk about infrastructure and stimulus money and all that. It comes to my attention that some of these large contracts for roads and bridges in the U.S. have been, in fact, picked up by Chinese national companies. This is true. At what point do they start building homes for us?
Well, they probably are already. I'm laughing, but there probably is some construction outfit somewhere, a pretty good scale that is, but I don't know that as a fact. Who knows what goes on behind the scenes? I mean, basically, since the Chinese have been so generous in buying our debt for so long, although they've slowed down noticeably the last year or so, or two, but nonetheless, you don't know what goes on when, Geithner or whomever goes over and meets with the finance ministry between the two countries. There could be some written or unwritten agreements that such and such work will be provided to Chinese corporations within the U.S. And that doesn't, wouldn't surprise me in any way, shape, or form. So, a lot of American businesses are based in China, a lot of manufacturing for, I shouldn't say U.S., because it depends where they are domiciled for their legal fiction, their corporation, their living, breathing fiction of a corporation. But these global corporations, a lot of them do their manufacturing out of China or in Asia generally anyhow, because it's cheaper, labor force is cheaper, there's not as many regulations, they got a higher profit margin, and on the story goes. So to see that reciprocate somewhat for Chinese contractors to come into the U.S. and build out, as you say, infrastructure here, it doesn't surprise me. In fact, it may be part of the World Trade Agreement. It could be part of any of those treaties that have been passed without any real due diligence on the part of the people because they're left out of the process. And away we go.
And we're heading down to the final stretch here as far as U.S. politics is concerned. Does any of this have an effect on the market one way or the other?
Well, I think what we've discussed, no. I mean, immediate, no. I think it's, again, kind of a slow grind here. And unfortunately, there are black swans and there are anomalies and there are one-offs. In other words, there are situations where you wake up and things are totally different in a given sector. I mean, for example, take a bank for a talking point. I mean, you can wake up in London one day and BlackRock is like closing its doors. Now, if you were in a different bank, you might have felt sorry for your neighbor that had all their money in BlackRock, but you really weren't affected. And those kind of things can happen. In fact, I can almost guarantee that more and more and more of them will happen. And so people need to, really wake up. I think anyone that's listening to this show or has listened to your show over the years, Ellis, is pretty astute, and I think most of them have probably taken some kind of positive action, but nonetheless, it's not something that a lot of people are really aware of, and if they are aware of it, they kind of discount it. And unfortunately, it's not to be discounted because you need to be early, not late. Once those bank doors close, it's pretty hard to get in.
But that's sort of a less likely scenario to happen now as opposed to 3 or 4 years ago. There's too many safeguards that have been added by the feds, let's say, to make sure that any of the big banks aren't really going to fail right now. Isn't it all washed out?
Well, I'd say that's a great point, Elson. I would agree with you. I mean, I don't want to contradict myself. Basically, the banks have been re-liquefied to a great degree, and even these banks that are failing and insolvent, usually in the U.S. anyway, and even in London as well, or in Great Britain, they're merged with other banks that are quote-unquote solvent, and, people don't really get locked out, as I said. So let me be a little clearer. Let me use the brokerage industry. I think that's a lot more accurate. I mean, you had MF Global, and a lot of people there went to Peregrine Financial Group, PFG, and then it failed. That's probably a better one as far as where to be careful. And I wouldn't rule out the banks entirely, but as you said, I mean, since there's only funny money, I mean, it's basically digital money, and it can be created by putting your finger on a computer screen somewhere. You don't have a lot to fear there, but in the brokerage industry, there's a lot more to fear because these shenanigans, I'll call them, that have been going on throughout that sector have caused a lot of people to lose a lot of money.
Speaking of shenanigans, there was a day a few weeks ago when the J.P. Morgan Chase and Bank of America websites were slow and overloaded. And it turns out that the Iranians had everything to do with getting into the system with a bit of cyber warfare. How safe is your digital money in that scenario?
Well, that's it, too. I was going to bring out something similar. I was thinking about, a power failure, either a long-term one or a short-term one, on the banking system, brokerage system, either one. That's one that hardly anyone ever talks about is internet cyber warfare. And those things do exist. I mean, we did it. We did it with this situation with this nuclear buildup, purportedly, and I don't really know what the facts are on that, but we went in with this worm program and really messed them up for a while. And, of course, it goes two ways. And that's the whole idea, is that these things can be real problems.
Unless you have silver or gold as a currency.
Well, that's certainly a big, big help. Yes. That can't be printed. That's not at the whim of any digit or digital play. So, no, it's one of the main reasons. I mean, there's several reasons, but that's one of the main ones, really, is it's outside of the matrix, as I call it. It isn't dependent on anybody's whim. It's just dependent on your ability to hold your own money. And if you hold it, safe and sound, you're in good shape.
And to become one of your educated followers on the Morgan Report, what do we have to do?
I just go to the website, themorganreport.com, all one word, and you can find the membership services on the right-hand side, the pull-down menu. There's also a video up on the front page right now. We will be increasing our prices at the end of the year, and you can lock in the current price, which is probably the lowest in the industry, and continue to hold that price as long as you maintain your membership. So it's, in my view, of course, I'm very biased. I am the proprietor along with the staff, but go ahead and have a look.
You have several ways to get some free information and get a taste of the Morgan Report before one would commit to what I believe is a reasonable subscription fee.
Exactly. There's an e-letter that comes out once a week that's free. That pretty much puts together all the interviews I do like this during the week, and also a question of the week that usually comes from a subscriber. And then we also have a YouTube channel, which is Silver Guru, and a Twitter feed, which is Silver Guru 22.
David, thanks so much for joining me today on the program. I look forward to visiting with you again in the very near future.
My pleasure. Thank you, Ellis.
I've been speaking with money, metals, and mining expert David Morgan. His website is themorganreport.com. Listen to this segment again on the podcast page of our website, ellismartinreport.com. This segment has been sponsored by LT Gray Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com.